Hi, so today we'll be talking about investment in a fixed deposit versus investment in a balance advantage fund. Now, you would have understood that the topic of an investment in an FD versus a balance advantage fund uh, brings to your mind the type of investors that we would be covering in this video. And obviously, we are talking about the risk-averse investors. Risk-averse investors are those who would not want to compromise or get let go of even 1 rupee of capital erosion from their portfolio. They are ready to have lower returns, but they don't want a single ana paisa of risk. Now, if you move from the FD into a slightly risky space, one of the stations which come in that journey is the balance advantage fund. And what I have done is I will be presenting to you a slide which kind of encapsulates this journey and compares the two destinations for you. Being an AMFI registered mutual fund distributor, I have also tied up with Prudent Corporate, and this is a slide from their deck, which they have made available to their channel partners, and I am kind of representing this to the larger audience. So I'll just share my screen with you now. Now, if you look at my screen here, if you put an investment of make an investment of 10 lakh rupees for 3 years in a bank FD, I have taken the slide takes the a 3-year bank FD rate for SBI, which is 5.3%. You are having an investment of which will grow to 11,67,576 after 3 years, which gives you a gain of about 1,67,576. Now, FD interest would be clubbed under income from other sources and therefore will be clubbed to your gross total income, and it will be taxed at different rates, 10%, 20%, 30%, depending upon which slab you fall into. And depending on that, this is the tax liability that will emanate 1633 or 50. So if you reduce this amount from your total gains here, you will get your net gain after tax. And these are your returns after tax, which can vary anywhere between 3.77% to 4.79%, depending upon the tax bracket that you fall into. Now, if you put your same money into a balanced advantage fund, let me actually do that for you. So I am looking at an investment of 10 lakh rupees. And this investment after 3 years is going to become 10 lakhs into, we have taken a conservative return estimate of 10% for the balance advantage fund. So this grows to a corpus of 13,31,000, which means the gain that accrues to the investor is 3,31,000 rupees. If you go by the new regime, you would have known that capital gains up to 1 lakh rupees isn't taxable. Beyond 1 lakh, the excess is taxable at 10%. So the excess over 1 lakh is 331 minus 1 lakh, which is 231. And this would be taxed at 10%. So the tax would be 231 into 10%, which is 23,100. So the net gain that the investor would make would be 331 minus 23,100, which is 3,07,900. So if you take your ROI for 3 years, over a 3-year period, it becomes 307,900 divided by your investment of 10 lakhs. Converted to percentage, it is 30.79%. But if you want the annualized ROI, which is a 1-year ROI, we can annualize this 1 plus the 3-year return to the power of 1 by 3 minus 1, which comes to 9.36% here. And this is the same 9.36% that you're seeing on the slide here, okay? So if you compare this, post-tax ROI is about 2.5 times at least in a balanced advantage fund as compared to a fixed deposit. But again, please read the disclaimer, mutual fund investments are subject to market risks, right? So nobody can guarantee these returns to you. Our fraternity can only guide and advise you to what suits you best based on your risk and return preferences. For more questions, you can reach out at premierwealth@outlook.com, or my numbers are 88502-27410 or 99205-28261. Thank you very much and best wishes on your journey to informed investing.